Hello everyone, welcome back to today's video. I hope you're all doing fine and well today. And yes, we had a very good week. All right, the week was very interesting. As you can see, this is DXY. So let's start with DXY today. Okay, so taking a look at DXY, you will notice we got a very interesting bullish momentum last week. And if you watched the previous video, you would hear me say that I am slightly bullish to neutral on DXY. And I wasn't just that. It wasn't because of the chart, because at the time, dollar index was around here. Okay, this is what happened 21 to 26th. Okay, this is more like what happened last week. Okay, everything that happened last week was like around here. Which is 23 to 26, so to speak. Okay, so it was more like this. All right. And you can see we got this very interesting momentum on DXY. Now, where do we go from here? All right. Before we talk about where we'd probably see dollar in the next couple of weeks, probably by next week when I'll be recording a video like this, or I'll be making a content like this. Okay, we need to understand where we stand on the economy. Okay, so first off, you can see this is the US economic heat map. All right, you see where we are right now. We got a very interesting GDP growth last week. I think Thursday or Wednesday, I can't really remember. Okay, but I think it was Thursday, September 25th. That should be Thursday, yes. So we got 3.8% when we're actually forecasting and expecting 3.3%. Okay, so we got a very good growth in the GDP. All right, the GDP survey came very well. The manufacturing PMIs stayed the same, literally, because we've not really had any update from the manufacturing PMI, the service PMI, the retail sales month on month, the CPI and the PPI have not really had any update from any of those. But when you take a look at that, because we still have to make use of all of this data, because that is what the market is being positioned on or acted on as we speak. This is what analysts all around the world, this is the data we are all using. Okay, the actual that we've got right now. Although there are a couple of things that have been priced in. Okay, Donald Trump is still doubling down on the tariff show. All right, but this is what we have right now. This is what we can actually lay our finger on. Okay, so inflation, literally from the retail sales to CPI to PPI to PCE, we actually got a very decent PCE last week also, last week, Friday. All right, we got 2.9%, just exactly what was being forecasted. I think, no, they didn't come at the same time. It was initial jobless claim and GDP survey that came at the same time, literally. So we got a very good one. We're going to talk about the labor data later. But taking a look at what we have on the inflationary front, okay, we are still pretty flat on that one, okay? Because, yeah, we've been pretty flat since the 15th, since the middle of this month, September, okay? So we've been actually very flat because that was the last time we got any serious update until yesterday when we got something on pre-sale, okay? So that is that on the inflationary, on inflation front, okay? We're pretty flat on that one. But when you take a look at the labor data, okay, we're getting some very good traction from there. Since we got JOTS, ADP, and on-farm payroll that came very terrible. Okay, since then we've got like three more initial jobless claim, and so far it has been reducing slowly. Although the reduction is not that exorbitant, it's not that big, but it is decent. Okay, we've got initially it was 345, then we got 332, then we got 335, then it was 240 something, okay? Then we got 232, 235, now we're getting 218, meaning the initial jobless claim, meaning the number of people that kind of like go to the, where they file for unemployment in the United States, they are reducing slowly because this has to be done every week based on people that probably quit their job, based on people that probably get laid off, all right? Maybe because of one thing or another, you just lose your job, okay? These are the kind of people that file these reports every week. All right, so initial jobless claim is different from the unemployment rate. Okay, unemployment rate is the general view on a monthly basis. So how many people doesn't really have a job in the United States? But initial jobless claim is more like a filing. Okay, it's more like a survey that is done every other week. Okay, so now that we've covered that, now you can see that the job data or the labor market in the United States is actually coming up gradually. 25%, that's very good. Growth still remains very strong, especially riding on the back of this GDP, the quarterly GDP that came out on Thursday. That was really good. The PCE also looks like it is not dropping yet, and the retail sales also indicated that yes, people are still going out to get some stuff. That means there's still money in the economy. People are not really feeling laid back to buy stuff yet. Okay, it hasn't gotten to that level. So overall, we're getting 44% on the dollar strength, okay, as a currency, and we have 56% on the stock, in the US stock, literally just the economy. So that is more like where we are right now on the US economy, and that looks very, very, very good. So now moving forward, okay, let's go back to the chart again. All right, I think we have to talk about the chart now. Taking a look at DXY, okay, if you're paying close attention to the price levels, all right, you will see that we started from when the market dipped down here. This was Fed. Okay, this was during the Fed's report, the FOMC report. Okay, we got around 96.21. Okay, and then the market just rallied higher to something around 97.60. Okay, and after that we got this pullback, and then we got another rally, slightly touching 98.50. Okay, now the selling pressure seems to be getting over gradually, although on a more what's it called again, in a larger view of things, you will still notice that DXY is still very bearish. Okay, and taking a look at DXY, like the overall market sentiment, the overall view in the market, you see that DXY is still very, very bearish. But gradually, okay, when the market is trying to take a turn, when the market is trying to probably recuperate and start moving upward, okay, maybe we're getting, if the market is going to shift, okay, sometimes it happens very fast, sometimes it happens very slow. As a matter of fact, if you take a look at what happened in, I think, January this year, okay, we got this. Okay, the market also ranged for a while. Okay, from December up until February, March, yeah, literally March. Okay, the market ranges for like 3 months, January, February, March. It ranges like a lot. Okay, a lot. So this is more like what we're also getting at the bottom here since I think July, August. Now we have September. Okay, 3 months again. The market seems to be, seems like it's not going anywhere. Okay, so personally, I would say that if this bullish momentum seems to continue this way, okay, if we get a pullback to this particular region on DXY, and considering that we're getting a more serious labor data, because by next week, I think next week we should be getting, excuse me, let's actually take a look at it together, the economic calendar. Okay, taking a look at the economic calendar, yes, we have NFP coming next week, so that's very good. Okay, on Friday we have the usual, okay, we have the average hourly earnings, we have the non-farm payroll, we have the unemployment rate, and also, take a look at this, we have the unemployment claim also coming, and it's forecasted to actually come slightly higher, okay, slightly higher. So now everything now rides on the unemployment claim coming on next week, Thursday. We have ADP also, we have JOLTS, the usual is coming, they're all coming in next week. From Tuesday, we have JOLTS job opening, we have the ADP non-farm payroll employment chain, okay, we have the unemployment claim on Thursday, the survey I told you about earlier, and then we have the average hourly earnings, we have the non-farm payroll, and we have the unemployment rate. Now, if you take a look at the data, the actual that we are really expecting from all of this, look at the non-farm payroll. We're expecting 51K job. That is like 30K added job. That's very good. Okay, because if you take a look at if you drive back a little bit to the unemployment claim that we've gotten in the last couple of weeks, let me see if I can get that for you from here. All right, let me see if I can get the unemployment claim for you. Where is the labor market data unemployment claim in the United States? Let's see if we can take a look at that together. So that should give us like an hint. Exactly. Take a look at this. Okay, in the United States in September. This is September. This is the whole of September, right? Okay, this is the whole of September, right? Excuse me now. I think we have September from September 4th. All right, this is the whole of September, and we have October. October is just to be ready. It's yet to drop. That's next week Thursday. This coming week Thursday. Okay, so we have September 4th, September 11th, September 18th, and we have 25th. And when you take a look from the 18th, September 18th, we have 263K, we have 231K, and we have 218K. But then, if you take a look at what the forecast was, all right here, the forecast was what? We are forecasting 235K, but we got a higher number right there. Okay, that was very bad for the dollar at the time. But right here, if you look at this, the forecast was 241K, but we got a revised version to be what? 232K, and then we get an actual to be 231K. That's a reduction in the unemployment claim. If we look at the 25th of September, the market is forecasting 233K, but we got 218K. So literally since the 15th, since the 15th of September, we've gotten a reduction in the unemployment claim, meaning the number of people that are filing for unemployment, people are filing the stimulus checks, stuff like that. All right, they are getting reduced gradually, and I think 268K is actually the highest we've seen since April this year. Okay, since April this year, 268K is the highest we've seen so far. And now, if we are forecasting a little higher again, which is right here. Give me a minute. Unemployment claim right here, we are still forecasting 229K. So I mean, it is just normal if we get something lower this time around, maybe around 200K. Okay, I mean, I would expect that. And if we are getting, we had additional job added here. I mean, when you have a lower people for filing for unemployment, okay, when you have lower number of people filing for unemployment, that means people actually go employed. That means a job was added during that week. Another job was added during that week. If you get a lower number this time as well, that means another job got added. Okay, this is how you can forecast for what? NFP. So when they now said NFP is coming as what? NFP is coming, I mean, like roughly 30K job will be added compared to previous, which was 22K. We are expecting 51,000 job. That is like the summation of all the job that has been added so far from 25th to excuse me, from 15th to, from 18th to 25. Okay, from the 11th to 18th to 25. Okay, so those jobs have been compiling together, and possibly we're going to get probably even a higher number than what the market is forecasting for NFP. Now, this is all sentiment. This is just me trying to use my head to wrap around this whole thing. Nothing is certain yet, but this is how you can forecast for NFP. And then not just that, the job opening also, if it comes pretty good, that is also an addition to you being able to potentially guess, okay, I'll just like have an idea of what the NFP is going to look like, because NFP is a real data that kind of tell us, yes, this month, last month, we got newly job opening, we got new job added, and this is the number of job that was added to the economy, and you see the market actually react to that. Now, this is where I'm going. Okay, I came from DXY to this place. If we get probably a higher number than 51K, okay, a higher number, maybe we get like maybe around 90K job got added to the economy, then we're going to see dollar strength continue. That's actually where I'm going. If unemployment rate slightly drop from 4.3, which is what we're forecasting, okay, if it goes, maybe it dropped to like 4.2%, excuse me. If we get 4.2%, then that's good for the currency. Again, for the currency and for the economy, everything is just good. When it's everywhere good, yeah, that's good. Okay, and then average hourly earnings, anything from 0.4% will also be very good. Okay, anything from 0.4% will also be very good. Now, don't forget, we start from the JOTS, go to the ADP, all the way down to what? The unemployment claim, and then we got the three bracket data. So pay close attention to this week data. It is very important for the United States dollar. All right. So moving back here. Okay. If you ask me where I stand, I'm still slightly bullish. Okay, not like long-term bullish. Don't forget, I already said that overall DXY is bearish, but it looks like we're getting a rejection from the bottom here. Probably just slightly move to the upside. Okay, we don't know. Okay, I don't know how strong dollar is going to be. Okay, I don't know how Trump is going to try to mess the whole thing up. Okay, but we have to just be patient right here. All right. So practically, I would say that I'm expecting dollar to actually drop a little bit. Okay, maybe on Monday or Tuesday, and then we get a rally back to the upside gradually. Okay, the target is still around that 100 zone. I'm still targeting this particular high right now. Okay, I'm not going to be too crazy and expect the market to probably jump to 105 or 106 or 107. Never going to happen next week. It's not possible to happen next week. It is just not possible. Okay, we are definitely not going to get the market to get to probably this place. Okay, this 105 is not feasible. 104 is not even feasible next week. Okay, unless something crazy happen and we got back-to-back good data, or Trump just probably said that yes, he's been saying United States is good, blah 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 blah. It doesn't really help anybody, but something significant. I don't even know what could happen that will make dollar just fly like this for like 4 days straight. It's almost impossible. But never say never, right? So personally, I would say that I'm expecting dollar to actually drop a little bit and then rally hard. Okay, I want to see something like this. Okay, this is something I would potentially trade because I like momentum. I like lower high, lower low, higher high, higher low. Okay, I like stuff like this. This is how I trade. That is how I put, I make sense of the market. I don't like all this crazy pump and dump. I don't like it at all. So that is where I stand right now. I'm slightly bullish on the DXY. So pay close attention to it. It dropped. Small drop, then another rally to the upside that will potentially break this particular supply zone. Okay, and then we get a retest. Okay, which would probably turn this place to a resistance. Then the market come back down, use that support, and then we got it right to the upside. Okay, I'm just this week that we're getting to. I'm only looking for 100. Okay, looking forward to seeing DXY around that 100 zone. If that is done, I am good. Okay, so now that we've spent close to 5, 6, 7 minutes on DXY, I think we have an idea of what to expect from dollar index now. We are slightly bullish, right? So you should know that USD CAD, Usdjpy, USD CHF, I am bullish on them. Okay, I want to be looking for buy opportunity. And NZD dollar, Kiwi dollar, NZD dollar and Kiwi dollar, they're the same thing. So Kiwi dollar, Aussie dollar, pound dollar, euro dollar, I will be anticipating for a short opportunity on those. And that is where I'm standing on the dollar, on the major pair, excuse me. So, but before I go to the chart fully, let's take a look at the economic calendar itself. Okay, take a look at this. This looks very interesting, isn't it? It looks amazing. Okay, no, that's too small. Good, that's better. So, taking a look at the economic surprise mirror, you can see that only the United States dollar and pound seems to be stronger. They're not even strong. Okay, they are below 50, which is neutral, which is the bare minimum, right, for me to consider strong. But when you take a look at all of this in general, you see that only the dollar and the pound are slightly stronger than the rest of the pack. Okay, you can see we have Euro at 33%, JPY at 38%, Kiwi at 25%, CAD at 25%, Aussie at 29%, and Swiss at 33%. This is awful. And you can see the average economic score is like 33% for the G7, right? For the G7 countries. 33% is terrible, guys. Awful. Now, this is good because for dollar to be 44%, when its counterparts are this low, then we have a short on that bias I just shared with you that we're going to be buying dollar CAD, dollar Swiss, and dollar yen. And we can short euro, dollar, the rest. You know what I'm trying to say, the major pairs, okay? Because don't forget that previously, okay, in the previous time, when we used to have like 25%, 30%, and pound was like 75%, euro was like 85%. I saw Kiwi around that 88, 90%, sometimes in the past. CAD was around 48, 60%. Aussie was like 70%. We got all those buys because dollar is actually weak. Now, is the inverse. Although dollar is not super strong, but we know that a slightly strong dollar will beat a minimal euro. Okay, like euro at 50% and dollar at 40%, dollar will still beat it. Okay, it's just the sentiment, it's just the way the market works. Okay, so now the plan is plain and simple. Okay, let's anticipate for what? A rally harder, a more stronger dollar, okay, a more weaker euro, JPY, NZD, CAD, Aussie, and Swiss. All right, that is where I am at on all of these pair right now. Okay, so let's pay close attention to this. Let's plan forward. Let's look forward to them, and let's position ourselves to take advantage of all of this. So lastly, where I will be touching again before I jump to the chart fully is this top setup. Okay, you can see right here on top setup we have USD CAD bullish. I already took a buy like 2 weeks ago on USD CAD. Okay, and they are doing very, very well right now. We have Usdjpy also bullish. I took a very small buy last week, but I closed it when dollar yen was approaching a very good resistance. However, it broke that resistance. Now I'm waiting for pullback so I can buy again and then leave that one to the upside. So I have this as one of my trade recommendations. So let's pay close attention to Usdjpy. China 50, which is the same thing as Hong Kong 50. Okay, I took a buy on Hong Kong 50 on Friday. I will share that trade with you as time goes on. US oil, I'm also buying US oil. Swiss yen, I'm buying Swiss yen as well. I mean, I'm just buying everything. Don't mind me. I don't have any short position right now. Everything is buy. It's just very fun, right? Well, it is what it is, right? Especially Swiss yen, I don't have plan to close it this year, honestly. I don't have plan to close Swiss yen this year. Now, I'm buying Swiss against yen, and the inflation differential is slightly like 0% to 0.5% because Swiss has no interest rate and yen has slightly 0.5%. Now, Japanese yen, Bank of Japan is planning to hike their rate maybe by 25 basis points or 50 basis points by the end of the year. Okay, we're gonna look into that later. But right now the trade. So if I'm looking at the swap, the charges that I'll have to pay on this particular positions, it is bare minimum. All right, compared to trading something like Swiss dollar, you're buying Swiss against the dollar. That would be awful because we have like 0.44% differential between both of them. So that's just like another thought that you might want to consider. Okay, so Swiss yen I'm buying. I have a very good plan on pound Aussie that I will share with you. It's a very good trade. If I don't really trade pound card, likes of euro card, pound Aussie, Euro GBP, they are not my best pair. They are not top 500 pairs I trade. Okay, if there's 500 currency pairs readily available for me to trade, they will not be among the top 500, believe me. All this pair, pound card, pound Aussie, pound Kiwi, pound pound Swiss, they are really not my kind of trade because they are very weird. They don't really have any serious momentum, especially Eurusd. I took a loss on Eurusd last week and I deleted the chart myself. I deleted the pair. Okay, my students, my friends know me that I don't like that pair for nothing. Okay, for nothing. So now on pound Aussie, I have something very good on it, and I will share with you later. So if you watch this video to this place, then you want to subscribe, you want to like the video, and you want to share it with your friend. All right. So pound yen is awful, but I'm in a buy trade. It's a very awful pair that I've been holding for a very long time, but I'm still holding, I'm still buying, but it's very awful. It's part of the business, right? So we have Dow Jones. I'm looking to buy Dow Jones next week. If I get a very good entry, I might take a look at it. NASDAQ also looks very good. So if there's an entry right there, I will share with you, and then we're gonna see if we can take the trade together. Aussie dollar, Kiwi dollar, Aussie dollar, Euro dollar, they're all very bearish right now, and I have a very good plan on it. Although Aussie dollar is very terrible, okay, the structure is not something I would trade, but I like the structure on Euro dollar. I like the structure on Kiwi dollar, so we're gonna take a look at that. NZD, CHF, and all this Aussie Swiss, they are far too low for me to short. Far too low for me to short, and the differentials, again, the charges will be too big. When you're shorting NZD against Swiss, that will be too big for me to handle. So I'm just gonna let those ones fly, all right, as time goes on. So don't forget Euro dollar, Aussie dollar, and Kiwi dollar, probably pound dollar too. I'll be looking to short them, okay. And we have USD card, Usdjpy. I mean, you know the show. Those are the one I'll be looking to buy. So let's start from my open positions. All right, now this is the chart. This is what you've been waiting for, right? I can imagine. Now let's get into it. So Swiss yen right now looks very good. Okay, like I don't have any top I can target for now. All right, let's go to the daily time frame. Let's kind of like extend this a little bit. There's no top to this. It's at the all-time high, the ever all-time high. Okay, there's nothing to target. There's no place. It's just, if it's gonna fly, I say we let it fly, right? Because don't forget, this year I was quite bearish on this thing because I was thinking maybe we're gonna get it to drop to this particular region, and I was wrong. Now we got this massive rally to the upside. We got this pullback, and I bought here. I closed it. I bought here. I closed it. Now I took a buy here. This might be like the next rally to maybe 200 on Swiss yen, and I don't want to stand in the way. Although this particular position is being trailed by me and mine, okay. However, I'm not gonna stand in the way of this profit. If it's gonna give me profit, I'll take it. If not, I would likely like to be trailed out. This particular one is even like at break even right now. Like I said, the charge is not much, but this one is very good in profit. Okay, most of the pictures I shared on all this trade and I just my my intraday trade. Or let me just say, I'm more like a content creator for the not ready Lambo traders. Like if you're trading $1,000, a $500 account, yeah. So I like to share something you can relate to when you see $50 profit, you only have $50 profit. As I showing $3,000 profit, $50,000 profit. Yeah, it's weird. All right, why? You don't need all of that pressure. So let's just stick it to $50, $100, $200 profit. That's fine. So I like to just share my small account size kind of trade positions with you guys, so you can see that. Okay, I also take all of these trades. I'm not just talking to the chat, That's why I kind of share stuff like that. Okay, no time for pressure. Let's just live good. Let everybody be fine. $50 profit is good. $30 profit is good. You're making $100 profit in a month is fine. Okay, you're living in Nigeria literally, and you're trading a $500 to $1,000 account is fine. Okay, don't put yourself in any pressure. Don't let a 10,000 profit, maybe $50,000 profits scare you into trying to, go and borrow money that you don't need to trade the market that you don't understand. Okay, don't put yourself in any pressure. So that's why I like to use those small profit. Like you see $50 profit, you see 35, you see, I will share everything. So moving forward, I'm expecting a further rally on Swiss yen. Now, this is not a very massive rally kind of pair. It does massive rally and it does pull back. It pull back like 71.8% most of its rally. So you should pay close attention to that and put that at the back of your mind as well. So it's gonna be a very good run. But definitely over time, we're going to get all those pullbacks. So I'm ready for all of it. Okay. So nothing too scary, nothing too crazy, just the usual stuff. Okay. So moving on to USD card. USD card looks very good. I don't have any new entry for you now on USD card, even though on Edgefinder it is reading very bullish. Okay. It's more like the only major pair that is reading very bullish anyway. You can see Usdjpy is like 8+. All right. But overall, USD card looks very good. And yeah, let's just follow how it goes. Okay, I don't really have any other thing on it other than I'm just gonna hold my trailing. This one I'm actually trailing very tightly. I have a trailing stop here and I have one here. All right, So in case he wants to pull back to this particular region, I will have this one closed, which is this particular trade, and I will add to this one, okay, moving forward. So that might be a setup for you of sorts, but personally, it's gone. So let's just leave it alone. WTI, on the other hand, I'm still buying. Okay, I got a very good. I mean, I saw DXY at 1,025 pips, 1,025. I think it should be 0.25, right? Yeah, it should be 0.25. So I got 1,025 pips before noon on Friday, and before 4 p.m. on Friday. And when I was gonna wrap up for the week, I got this massive dump. I mean, this is part of the whole deal. Okay, when you're trading US oil, you know that you also kind of do crazy rally, then a drop back. Okay, so you don't want to tighten your stop loss on this one. You want to leave it. You want to give it some time to run. Although my trading stop is around here, because this trade at this particular region, it was around 1%. So I just put my trading stop here. Right now, I'm just watching it go. Whatever happens, happens, right? It doesn't matter. So Aussie yen is one of the one I'm also buying, but it's also kind of problematic. Okay, Aussie yen is also pretty much problematic. So, but I am, although some time ago when I took the trade, it was listed among the major, major top setup right here, around 8 or 9, so to speak. But now it has disappeared, right? It has disappeared. So now the plan on Aussie yen is to probably chill a little bit. Okay, the last video I recorded on Friday, I said I'm waiting for a close above here. If I get a close above here, okay, that would be helpful for me to see if I can add to this position. So Aussie yen, if you're interested in it, although it's no more listed on the, what's it called again? On Edge Finder. As a matter of fact, let's take a look at Usdjpy. Okay, I want to see if there's anything really interesting. If there's anything interesting on it, I will share with you later when it comes up. All right, but if there's anything interesting on it, I will share with you. If there's none, I think it's back here. You can see Aussie yen looks bearish. That's awful, right? It's neutral though, but with -2. I don't like that. So I would not consider buying this moving forward. But I would say that the structure still looks very good, in my opinion, though. But I guess because of the economics of price meter, right? We have, this one is loading up. I don't know why. Okay, the economics of price meter, when we saw it earlier, we saw that Aussie was around 25%. Yeah, this one right here, 29%. Yeah. So I guess that's why we're getting, and then we have a very weak EMC. So I guess that's why we're getting that region on Edge Finder. But I mean, let's just put a pen on this one. Let's put a pin on it. All right, looks good. Pound yen, like I said, it's awful. Okay, I have this copy trading I do for my friends. Again, my friends, and I've been buying this one. I've been buying it like every now and then. I bought here. I closed at the top here. Then I got tapped out because trading stop. I bought here again, trading stop. I bought here again, trading stop. This like my last buy was around here. Okay, but on my major account, because the copy trading account was actually very small. I think it was around $150. So I get to only open one particular position, risk around $3 on it. You can see how crazy it has to be. I have to reduce as many drawdown as possible to get a very good reading. Okay, from the system, the copy trading system. So I have to just risk as very little as possible. The maximum risk is $5 on this particular copy trading. So it was very tricky, very tricky. So I took a buy here. The moment the trade is running on 30 pips, I'm already trailing. It's like trading. So I get caught out very easily because again, capital protection is very paramount for me, especially when you're trading that very small account. And what you might ask, why am I doing that? Because I'm just a cool guy. I'm just a cool guy. I'm just kidding. But I'm just doing it, for my friends, literally. Not everybody would be able to do this in themselves, just to be real with us. Okay. So, anyways, I'm still buying this one. I think the trade should be like maybe $2.6 profit right now. But you can guess, I'm already trading. Like I'm already trading like I think maybe 7 pips. Maybe around I think 60 cents or so. You can imagine. So, anyways, I'm trading that one. Let's see how it goes. But on my major account, I have my entry here. The one I took is still there. The one I took is still there. I've not really changed anything on the major account. And even on my own small profile account of 10K, 5K, I'm still buying around here and around here. So I'm not really trading those ones too crazy. It is the copy trading account I like to just micromanage, so to speak, because I don't like problems. So that's just that, by the way. Moving on to, so on DJ, let's go back to DJ a little bit. Let me give you my 2 cents on that after my rambling. I think there's still higher potential of more bullish momentum to the upside. And you can see, when you take a look at all the yen pairs, it is only DJ and Euro J that haven't really done much rally. We had to UJ done a very crazy rally. Aussie yen did a very crazy rally. Kiwi yen jumped like crazy. CAD yen didn't really do much of rally too. And then we have GJ. GJ used to be the champion of rallies when it comes to the yen pairs. But we saw the champion of rallies now become, you know, the I don't know the other champion, like the losers of rallies. It's very weird. But anyways, I'm still buying, and I think we have a very big potential right here. And when you take a look at the economy too, economic divergence or differentials, we have pound at 40%, we have yen at 38%, just likely 2% difference. So I mean, we're gonna see how it goes moving forward, but I'm quite decent, and I'm hopeful on that one. Hong Kong 50 that I told you I'm buying, that looks very good. I'm still buying. This one doesn't really do crazy pullbacks like that. And it's a very, very decent momentum. I mean, it has a very good momentum. Unlike all the you know, other indices, it has a very cool momentum. I just kind of like it. All right, I just kind of like it. So I took this very early entry. You would definitely see that it was a very early entry. On a normal day, I would have expected. I would wait for it to come down here. But when you've traded indices for a very long time, you know that sometimes you don't get it. Okay, you don't get it. So if the market move up, break above here, I will trade it. Now wants to come back down again, I will get tapped out here, and then I will buy again right here. As a matter of fact, I have a pending order at the bottom here. So let's see how that goes moving forward. All right, on 50. But for now, if you want to join this trade, I will advise you to wait for it to come down here and buy. If you don't want to, then you can join me and just let's see if it's going to rally to the upside. Okay, but so far on Edge Finder top setup, we've seen the China 50 stay here for over, you know, it's been there for like 2 weeks now. So that's very good. That's a good point for the Hong Kong 50. So I took copper buy. This is my first time of trading copper. I don't know anything about the asset like that much. I've done a couple of research. Okay, I don't like this. I don't like the structure at all. It's very terrible. He has this. Yeah, he's highly motivated by fundamentals. Like he just rally and then just rally high, dump down. It's very terrible. Okay, so that would be that. But overall, it looks decent for a buy. And then at the time I took this buy, it was recommended here on top setup. So you know you can't blame me for taking the buy of copper. But let's see how that goes anyways. So moving on to my trade recommendation now. All right, drum roll. Let's start with dollar yen. You can guess what I'm going to be starting with. That's the dollar yen. I mean, dollar yen looks very good, isn't it? It looks super, super cool. Okay, this was the buy I told you I took. I took a buy here. I closed around here, and that's that. And then we got the rally, okay, because of the GDP. Okay, that's fair. Now, the plan is plain and simple. Wait for the pullback to 50% Fibonacci. Okay, you can see we have resistances here, and we have support here. Why? Because this market has been in a range for a very long time. So we've got this final breakout, pullback. Then what do you want to do? You want to buy? Okay, just a simple breakout strategy. That's what I'm deploying here with a lot, packed with a lot of fundamentals and everything. Okay, so just pay close attention to it. I have a long-term plan to actually buy at the top here if this happens, okay? But this one is just for a long term. It's for a long time. So nothing on this yet. Let's focus on what we have right here. Okay, what we have here. So if the market pull back to this region, this will be something we want to take a look at moving forward. All right. So that said, the next pair that I would also be buying or trading, and I would be recommending for you would be USD CHF. Dollar Swiss, I got out. I took a buy here from the bottom. Many of you know that. The rally to this particular region, got me tapped out around here. I mean, I could coming tapped like in a very, I think it was around here. Can't really remember. The trade was very good anyway. Then it took my TP at the top here. Now we're getting this particular pullback. Okay, I took another buy here, don't forget. Okay, so we're getting this pullback. My training stop is slightly below here. If we get the pullback to be deeper than 50%, I might close it. All right. If not, if we get rejection from this particular 50% Fibonacci, I would add to this position. Okay, although dollar Swiss is very bearish. Okay, I mean, look, take a look at it. Overall, it is awfully bearish, right? Very, very bearish. But don't forget, this is a very trend line inclined kind of movement. Okay, it loves trend line a lot. Okay, I've been trading this CHF for like 6 years now. Dollars will like trend lines. So we have one here, we have one here. If you take a look at this, we have trend lines here. It loves trend line. It lives for trend line. So I'm guessing, or I'm anticipating for potential retest of this particular region. Maybe you're gonna get this trend line retested. Maybe. Okay, maybe. And then we're gonna get another drop to the downside. Potentially, that might be like the next 6 months kind of trade setup or plan. But you know, it is what it is. Okay. And you know, 6 months happens faster than usual now. So pay close attention to that. But on a more shorter time frame, on a more smaller band, like smaller view, or shorter time frame, or short term, or mid term, whatever you want to call it, right? I would say market pull back to this particular resistance, okay, use it as support, then we get the market to rally harder to the upside. Plain and simple on USDHF. It doesn't have to be complicated. But it got in a low, a high, a low, a fresh high, a fresh low. We are looking for a new high at the top here. Then we might now get a massive pullback, okay, then rally hard to the upside. Okay, this 3-wave correction, then another rally, then we get another 3-wave correction, another rally. Back to that trend I was talking about earlier. So that's my plan on USDHF. So pay close attention to that. I don't want to talk about gold yet. Okay, I want gold to be the last thing I will talk about. So let's talk about US30. So what do we have on US30? Now, first off, US30 looks very good to buy. I was buying US30 for like a while. I took a buy here, I took some buy here, and I closed everything when it comes here, and then I got this rally to the upside. That was a very painful thing to even say out loud. Okay, very painful thing to say out loud. But then it is what it is. The plan now is it's reading bullish right now on edge finder with score of 5. So I just want to see it come down here a little bit. I'll probably come back to this particular one. Okay, I have one here, I have one here. If it comes back to this place, I will take a buy there. Small risk, medium risk. Let's say medium, it's not going to be small risk. Medium risk. If it comes down here, I will have to the position under medium risk to make it big and small risk, something like that. Okay, I'm not sure it's going to come back down to this place, but I'll pay close attention to it. All right, I will pay attention to this, this, and this. All right, we have serious demand here. We have a demand here, and we have a demand here. All right, excuse me for my phone. All right, today's Saturday. There's family gatherings everywhere. So that's just part of this. So pay close attention to this place for a buy, this place for a buy, and this place for a buy. All right, those are my regions to take a trade moving forward. Let me put the phone off. That's good. So moving forward to the next one, which is Pound Aussie. I told you I have something on Pound Aussie, right? So there it goes. Pound Aussie looks very good. Okay. Yes, it is reading bullish on Edge Finder, and it's just getting started. So Pound Aussie is reading bullish with score of 6. I think it might actually rally hard to maybe very bullish score of 9, score of 10 in the nearest future. So I don't want to miss out. I should have taken this buy right here, but like I said, it's not part of my top currency pair. It's not part of my favorite pair like that. I don't really like it. Okay. Less structure, more of a range band kind of movement. They don't really make too much sense to me. So I just kind of like chill on them. But for some of you that is very interested in it, I would suggest 2 entries on Pound Aussie. 2 entries, right? The market tap to this supply, come back down here, and then turn this place to a massive support region. Okay. Then you can take a buy there. Okay. A buy here and a buy here. Those are the 2 plans anyways. It's nothing too serious. It's already there. So nothing too serious, right? But a buy here and a buy here makes sense. Personally, I would probably choose this one, okay, because I don't really like it. And there's a high possibility of us getting into this particular resistance again, because I mean it's a range. Okay. It's a very, very good range. So resistance, support. So we get this thing to come down here. Take a buy. All right. So that's the plan on Pound Aussie. Nasdaq look very good. Okay. Again, the same plan I had on US30. Simple. Market come down here. I take a buy. Market rally harder to the upside. If that's not the case, we have some very, very crazy week right here. Okay, we have some demand here, not like super demand like that. Okay, but it's there. Okay, and then we have one here, which I will actually accept as a demand. So I'm not sure if Nasdaq comes down here. Yeah, something must be happening in the United States that is crazy, okay, for it to come down there. But let's pay close attention to it. But this place will be my first entry for sure. And it's going to be medium risk anyway, okay. Now, because I think we might get this particular bottom. But let's see how it goes, because it's a good time, okay, it's a good time. Let me not say something else. It's a really good time in the world now, so we have to be careful moving forward. So we have euro dollar. So those are my bullish buyers and bullish or buy recommendations. Now let's take a look at the short recommendations. Now, if you take a look at Euro USD, okay, it go really lazy. Okay, it go really lazy from where it started from, okay, which is right here. It started from here. You can see all these massive rallies, right? The market was rallying hard to the upside. Now it is slowing down sluggishly and weirdly. Okay, so I don't like that. But I mean, it's not based on what I like or what I don't like. It's based on what the market wants to do. So I guess if we get a push to the upside, a slight push to the upside that will tell the 50% Fibonacci, I would anticipate a short moving forward. Okay, I will anticipate a short. However, if we don't get this 50%, I'm not sure I would take euro dollar, and I may miss out on a very good trade. And that's the truth. I might miss out on a very good trade, but I pray that we get 50%. So let's hold our hands, let's close our eyes and pray that we get that 50% Fibonacci on euro dollar. If not, I'm not going to take it. But that's not the end of life, right? Because we have NZD dollar. Let's take a look at NZD dollar. NZD dollar also, I genuinely don't have Fibonacci on this one because NZD don't do Fibonacci like that. Okay, I love Fibonacci. It's one of my favorite too. Okay, but I also know NZD very well that it doesn't do Fibonacci. Not so. You see, one thing about trading is there are some things you use for some pair that you can't try with another pair because it's not going to work. Okay, if you're looking for very good structure on gold and silver, it makes sense. Fibonacci makes sense. But when you go to something like NASDAQ, something like DOW, Fibonacci doesn't really work. If you're looking for 50% pullback on DOW, you'll wait forever. Because the momentum that started last year never even did 50%. So there's no way for you to calculate the next 50%. So you just have to take it as it goes. Take it as it goes. Okay. So back to NZD dollar, is not a super fan of what Fibonacci pullback. It is not. Okay. Again, this is based on my own personal opinion and personal experience with NZD dollar. You might have a different experience, it's fine. But this is based on my own personal experience, and this dude doesn't do pullback like that. So the plan is to see if it's going to come back to this region, slightly around here, or even tap into this particular supply. If tap into this supply, I will sell it off. Okay, but I still need this pullback. I want to buy cheap. I want to sell expensive, excuse me. I want to sell at a very expensive price so I can get a better risk to reward ratio. Okay, that's the plan for me on NZD dollar. So pay close attention to that. Pound USD, that's like, it's not part of the trade recommendation on Edge Finder, but it's just good. This looks very, very good, right? So we got a liquidity trap and swap and sweep around here, whatever you want to say. Okay, but we got more like a trap at the top here. The market was ranging for a while. Okay, and this trap was very good for me because I was buying, and with the help of trading stuff, I got topped out, so that's very good. Okay, so now we got a trap. We got in a trap. The market moved down. Okay, don't forget another thing about range. When I was talking to you about range the last time, I said this is range. Okay, the market is ranging like this. If you want to take a buy and you're anticipating for where the market will break out on, okay, the build up has already happened. So that will give you an insight on where the market will lead to. And the same thing happened here. You can see we have a momentum to the upside. Now we are getting another momentum to the downside again. So that's telling you that maybe it's about time to what? To sell. Okay, you can be to the upside, you can be to the downside. It doesn't really matter. So that's the plan on pound USD. I would be selling pound dollar, but I need another push to 50% Fibonacci, and I will say, as a matter of fact, if it doesn't get to 50%, that's already done enough. All right, it has done enough. Okay, we've gotten like 38.6 already for sure. We must have gotten 38.2, excuse me. Yeah, we sure have gotten 38.2. So that's very good enough for me to take a shot on pound USD. So watch how this play out. Okay, the signal, the trade entry, whatever will be shared to my YouTube channel, on my Telegram channel and WhatsApp groups and everything like that. Aussie dollar, second to the last. I told you I don't like the structure on Aussie dollar, so that's part of the reason why I don't like this. Okay, I don't like this. Same thing happening to Kiwi, but I like Kiwi. Just as Kiwi, I like Kiwi. But Aussie, I don't really like it. But what can I do with this thing? This is me going like a little bit of a stretch, but I think if we get something like this, yeah, something like that is not bad on Aussie dollar, I guess. Okay, something like this is not bad on Aussie dollar. Get something like this. Okay, pull back to this particular region, this particular trend line. I guess we might probably take this trade. Alright, makes some sense. My trend line is not the best. I always tell you that my trend line is never the best. Okay, but it just makes sense to trade. It doesn't matter. So that's just the plan for me on Aussie dollar. But I'm still very much bearish. You can even see on Edgefinder right here. Okay, it's one of the very bearish. Bearish. -7 is very good. Just like 2 more for it to drop to very bearish. So that's very good on Aussie dollar. Pay close attention to it. And now, lastly, gold. What do we have on gold? The almighty gold. Okay, gold. So gold. Oh my god. I don't know, guys. 3.8 seems like it's gonna happen last week, but it did not. And we got that very crazy drop after hour on Friday. So can we buy from here? Can we wait for it to come down here? Should we wait for it to come down here or here? Anything can happen to gold, guys. Pay close attention to it. But personally, for me to buy, I'll wait for it around here and around here. I'm not gonna buy here. I'm not gonna buy here because it's too expensive. Very close to $4,000 that JP Morgan forecasted. Okay, it's very close to 4,000. 3.8 is very close to 4,000. Although there's still like a couple of pips to that place, but still very close. So the plan is to see it come down here, rally high, come down here, rally high. That's the plan. I'm gonna buy. However, right here, I don't think I will be buying like that. I'll probably scalp it. Okay, like I always do every London session, but I'm not gonna buy it. Definitely not. Okay, I'm not gonna trade it for a long time, like a swing trade. No way. I'll just scalp it for sure. If it come, however, if we break below here, if we go break below here, and pull back, and we get this rejection, I will sell. I will sell it. Okay, I will sell gold. If you want to sell gold, all right, let me just say, if you want to sell gold, this is not financial advice. This is pure technical. Okay, if you want to sell gold, wait for it to break below 3,720, a pullback. You have to wait for all of these things to play out. Okay, a pullback, a rejection of that pullback, like an engulfing candle, a bearish engulfing candle on the 4-hour time frame. You can sell it and target this particular region at 36.20. That's like 1,000 pips. Okay, if that happens, I will take the trade and I will share the result with you. But you have to see a break below 37.20, a pull back to that region, okay, and then the market drop down. 37.20 to 36.20. Those are the area I'm looking to short. You can easily get plus 700 pips profit on that trade based on your entry. Okay, plus 700 pips on a single position though. Okay, you can easily get 700 pips on that trade. So if that happens the way I just said it, you can take a trade and see how it goes. Don't risk too much, okay? I'll see you in the next one, guys. That's all for me today. Thank you for always subscribing. Thank you for always supporting the channel and the page. I appreciate it. So let's have a great day. I'll see you in the next one. Bye for now.